everyone, welcome to Ziwox Terminal. I'm Mustafa Amiri. Hope you are doing well. So let's quickly take a look at the week ahead. It's not a particular busy one this week, but we do have a few events that could provide some good volatility for us, obviously depending on the outcome that we get. So let's get stuck into it. Let me bring the calendar for you first. Okay. Now, first up, today and tomorrow, super quiet calendar. We know from the calendar there's not a whole lot to get excited about either today or tomorrow. A little bit later in today's session, though, we do have SMB's Jordan coming up. Look, I'm not expecting him to say anything new from prior meeting, but as you can see, he refused to give us any type of forward guidance on rates or the FX market, so I'm not expecting that to change. However, maybe we get lucky. Maybe he confirms our suspicions that they are now looking more aggressively for weaker Swiss franc. That will be perfect opportunity to press those Swiss franc shorts once again. Let me bring the chart for you. As you can see in first page of terminal, we can use this feature from trading view to load charts. As you can see, we had some upside trend today, and from beginning of the week we see some gain in Aussie dollar from commodity point of view. As you can see, and as you know, base metals moving upward can affect on Australian dollar strength. So we are watching some further upside, some potential zone for engaging for further upside in Aussie franc if Jordan help us. So it would be a good pair for watching this week. Aussie franc can be good for further upside opportunities, maybe from let me check the levels. Maybe from these levels could be would be a good level for Aussie franc re-engagement for longing this pair. So let's get back to calendar. I've been looking at opportunities to get backing, as you guys know, with the Aussie Swiss franc as well as the Euro Swiss franc. Almost jumped into this a little bit earlier today, but have just been a little bit too busy and haven't really got down to that just yet. So we will have some other opportunities in Euro franc, as you can see, but the main risk is ECB event this week, and it can provide some more opportunity to trade it furthermore, but we have to wait for some corrections to get in. So let's check the scanner for these two pairs. We have bullish moderate bias on Aussie franc. As you can see, the score is 7 from our filters point of view, and let me check Euro franc in the terminal. This is bullish, weak bullish, and the score is 1, but as you can see, others are red, so Euro franc has more risk to long this week. So we will stick to Aussie franc, and we will keep this pair in our watch list. Okay. As you know, for the rest of today, apart from that, tomorrow it's just gonna be super quiet. Let me get to calendar. Okay, obviously, the background, we've got to ongoing geopolitical situation that we need to monitor everything going on between Hamas and Israel at the negotiations in Cairo. We had some de-escalation over the weekend where we obviously saw that or heard news reports that Israel has withdrew quite a lot of troops from the south of Gaza, and the negotiation continue. So let's see. Maybe we got some type of a good development happening this week, and that's obviously something we need to keep on the radar, especially for things like gold, for things like oil. It would be so important that geopolitical risk de-escalate or escalate. It's will be main focus, and that's obviously some thing we need to keep on the radar. I told you, for gold and oil, it will be important for us to just keep that on our radar. Now, the fun starts more honestly on Wednesday. Wednesday is gonna be so important. Let me bring the Wednesday for you. Yeah. Wednesday is gonna be the power day for today, for this week rather. Big lineup that we've got coming up. We start off a slightly lighter though, with the RBNZ policy decision coming up nice and early during the Asia Pacific session. And as you can see, in terms of the RBNZ, let me check the central banks section in the terminal. Okay. Yeah, it's for RBNZ. As you can see, the policy is hawkish, but I think this is probably the less excited thing. I'm less excited about this week from policy point of view, because we are just not expecting much from the RBNZ, and it seems like that's case for most participants. The reason for that is, if you take a look at incoming data, there's really nothing that should change the bank's mind materially at all. What they did at the prior meeting, if you guys recall, they tilted slightly more dovish than what the market had anticipated. They lowered the OCR, or lowered the OCR projection, which was basically their way of saying, hey, the rate cuts or rate hike rather, that the market was pricing in for them. What we never really bought into, that hike was never gonna happen. They lowered the OCR to just give the market an idea that, listen, we are gonna keep rates where they are, and as you can see in the terminal, we expect holding in interest rates from RBNZ. So they want to tell us we are comfortable with higher for longer. We are not going to be looking to hike rates, and as you guys recall, that provides us with just a fantastic opportunity in the Aussie Kiwi pair. Beautiful run we had to the upside in our private channel. There was still twice as much left to squeeze out of the trade, which is always a little bit frustrating when you look at things like this. But in terms of that initial trade, that's just a monster for us. That was a really good one. Big trade, big opportunity. But we're not expecting much from this meeting. They surprised market last time. I'm not expecting the same for this week. So that's pretty much going to be nothing bigger, nothing important. Not expecting them to come out overly hawkish or overly dovish or anything like that. So that's probably gonna be a bit of nothing burger. That then main events arguably this week will be USCPI. Let's get back to calendar. Yeah, we have USCPI. As you can see, the previous one 3.2 for year over year in headline. Expect to have some up upside momentum to 3.4, and we expect some decreasing in inflation pace at core measure. So you have to keep that in mind, that the USDJPY will be very, very, very important for us this week. So markets are expecting a slight down tick in the prior and a slight uptick in the headline. And yeah, I told about that. Some downward in core measures, on some upward in headline, and expecting a slight up downtick in the core measure versus the prior, and the uptick in the headline measure. Now look, I'm not expecting how can we put this? There's a lot of focus right now on whether inflation reaccelerates in the medium term or not. The market isn't gonna get anything new from a medium term point of view about what's gonna happen to inflation with this week growth, but because of all of the upside, massive amounts of upside we've seen in yields. Let me bring the yields for you. Yeah, as you can see, okay, it's not working in here, so I will use some trading view. Yeah, we see further upside. We will see we saw some upside on US 10Y, US 10-year yields, but it's not gonna catch up by US dollar. You can see, yeah. For anyone who don't know the correlation between yields and US dollar, they have a straight correlation together, but now we see some divergence between them. So let me, yeah, you can see upward momentum in yields, downward momentum in US dollars, and I think investors prefer dollars more down, and it would be a better gauge for us to trade US dollars. Let me get back to calendar. Yeah, the market isn't gonna get anything new from a medium term point of view. I told you, and because of all this upside, massive amount of upside we've seen it in yield this week, and over the last week and a half, really big upside we've seen in yields because of that type of upside, because of all of the upside we've had in commodities. This one print, even though it shouldn't be enough to change the medium term outlook for anything, this thing can really move the markets this week because of the stress that we have in the system right now about what's going to happen to inflation in the medium term. That also means that everybody expecting inflation to go up, or with there being a higher risk of higher inflation, in the market's view, I don't think that beats will be as effective to trade as a miss. So now, don't get me wrong, if the things come up in a hot, super hot, that's gonna be market moving. The one thing that I'm just concerned about, especially, let me, yeah, okay. Don't get me wrong on this. If this comes super hot, that's gonna be market moving. The one thing that I'm just concerned about, especially when it comes to the dollar, once again, is we are so close from that 152 on dollar yen. Yeah, we can see in the terminal the dollar yen. Yeah, we are so close. We are so close to 152 handle, and you know, the risk here is that we push into or above 152 this week on a hot number, and that forces the BOJ, as you know, BOJ is Bank of Japan, to step in and intervene. And you don't want to be long dollars when they intervene in this market, because those are aggressive moves. Let's me go back to 2022. Yeah, I will change the, yeah. You don't want to be in this market in these type of moves. So uh, go back. Let me just show you guys. You don't want to be long dollars when they do either this or they do this. That's a big problem. So we need to watch that 152 level. That's another reason why I'm just not sure whether a beat in the data would be as attractive to trade. But don't get me wrong. You know, if the data comes as super hot, even though there's dollar risk, if it does come in really hot, some downside opportunities in gold could be on the card. Some downside opportunities in the short term in equities could be on the card as well. That we let you know on our signal and trade ideas section in the terminal. As you can see, let me get back to calendar. We have Bank of Canada monetary policy reports. We have the statement. We have interest rate decision. The Bank of Canada should keep rates on hold next week, as you can see in our central banks section in terminal. Yeah, it will hold. It will hold. It would be so surprising for me if they change the tone. Because of some bad growthing datas in Canada, some bad jobs datas in Canada we get last week. So this view is shared by both markets and economists after the Governing Council shifted the goalposts back in March from improvement in core inflation development and the overall level of inflation. Even this week meetings is worth keeping a close eye on, as the bank will need to adjust its guidance once again to prepare for June rate cuts, and it can help us to trade some Canadian dollar weakness. So we have Canadian dollar in our watch list this week. We expect nothing much from China, Chinese CPI. If we get a miss, it would be good for stock sentiments. As you can see, we had some risk on tone today. The Aussie dollar, the Kiwi dollar, leading the pack to the upside. We have downside momentum on Japanese yen and Swiss franc, and as you know, they are safe havens. So the two-day sentiment shows us some risk on momentum, but it clearly depends on the Wednesday US data that the sentiment will remain positive or not. Another gauge for the sentiment is Chinese CPI. This week, the missing CPI should lead us to some more positive sentiment, lead the market to more rate cut probabilities for Bank of China, PBOC. So the end of the week, we have ECB monetary policy statement and decision. We expect nothing for ECB, but the euro have some upside potential if ECB cause some downward momentums in euro. It would be a good opportunity for us for buying euro for medium term and Further months, we have UK GDP. As you know, GDP is laggard data. It's lagged, and it has nothing new for us for the sterling this week. We prefer to not trade sterling this week. As you can see, here is the CFTC datas, or as you know, the COT datas that will update in terminal every week at Monday. The data release on Friday and collect in the last week Tuesday. So it has some lag, but we will use that on our trade. As you can see, the long in Australian dollar is good for us. We can see some in more upside momentum in commodities like copper, like iron ore. We could see some unwinding in short positioning of Australian dollar, and it could lead to more strength for AUD. Yeah. Okay. That was this week. Week ahead, we will be with you with a preview of some economical events this week. We will preview. We will have preview on USDJPY in Tuesday. So be with us. Have a nice day. Bye bye.